If I said jumbo popcorn, you got a big smile on your face. But the second I say jumbo mortgage, everybody tends to get a little down. Hey, it's your buddy, it's your mortgage guy, Jamie Billheiser here. Want to take a couple minutes to talk jumbo mortgages. I have a lot of clients that are either in jumbo mortgages due to the value of the home or the amount that they owe. And they end up in the misconception that they're really hammered down as to what they can do and the sacrifices they need to make in regard to the mortgage vehicles that are available to them when looking to either buy or refinance. Let's start out here, talking Wisconsin and Illinois. If you owe more than $417,000 or intend to owe more than $417,000 on a property, you're in what's called the jumbo zone. Now, when people owe that kind of money on their property, they think, like I said, that they're very hamstrung into the loan programs that are offered to them. Truth be told, you don't get the wide array of products that are available to someone that owes less than $417,000. But let's keep in mind two major ways to kill that cat in the alley to make sure you're not dumping more money on interest than you need to be. So let's talk jumbo product for a couple of minutes. First of all, the maximum loan to value on a jumbo product is commonly 90% loan to value. What does that mean? If the house is $1 million, the most you can borrow is $900,000. Commonly, the homeowner is going to choose to take out what's called an ARM, or an adjustable rate mortgage. A mortgage vehicle that has a fixed rate for a certain period of time, commonly in this case, 1 year, 3 years, 5 years, or 7 years. And then after that, for the duration of the 30-year amortization, the loan's interest rate can technically be variable, making the borrower subject to market conditions and a higher or lower monthly payment. Now, what I always like to discuss with my clients is also the possibility of what's called a combo or piggyback loan. What does that mean? That means, let's say you're borrowing $650,000. I like to look at the option of getting you back into Fannie Mae or Freddie Mac financing by delivering to you a 30-year fixed with the market rates today up to $417,000 loan amount. Then we allocate the rest of the money through either a home equity line of credit or a closed-end second mortgage. Now granted, the second mortgage loan terms won't be as favorable as the $417,000 you borrowed on a 30-year fixed, but you're hedging your bet there. You're taking a majority of your debt, putting it into a very secured loan program over 30 years. If the piggyback or combo loan program isn't the option for you, going back to our array of jumbo product, the interest rates are incredible right now. And like I try to share with any client taking out an adjustable rate mortgage, let's pick the right horse for the race. Maybe you only plan on being in this house for the next 3, 5, or 7 years. Maybe the ARM is the way to go versus looking at those higher fixed jumbo rate programs. If you or your loved ones have any questions about jumbo loan programs or the interest rates or the different options that might be available on a case-by-case basis, as always, the team always responds. Reach out to us right here. If we're talking jumbo, that means you probably worked your tail off and you've earned a pretty big home with a pretty big loan on it. Let's just make sure you're not taking a bath and you're in the best possible mortgage products you can be in to take care of you, your family, and your pocketbook. Keep in mind, jumbo loan doesn't mean it's got to be a jumbo pain in the ass. This is your buddy, your mortgage guy, saving you jack on your shack.
Hey, follow me on Twitter